Hey there, Tamir from Fibonaccis-Traders.com here with the daily educational video. In this video, I want to take you through my journey as a trader, how I became what I became today, how I looked at charts when I started trading 6-7 years ago, and how I look at charts today. There is a big difference, and I will try to share this difference with you. In the beginning, I used technical analysis and not price action analysis. Today, I'm using price action analysis and not technical analysis. Sounds strange, but there is a difference. I made a short video on the differences between technical analysis and price action analysis. The link will pop just about now on the right corner, so check it out. Basically, technical analysis is using lagging indicators. Price action analysis is really going in depth the candlesticks and trying to figure where we might be in the next candle on every time frame that we are looking at and trading on. So, long story short, we have here the most common EMAs: 9, 20, 50, 100, 200. I can make this the 150, I can make this the 21, I can make this the 8. It doesn't really matter. Why? Because all indicators, by definition, they are lagging price. How do we know it? Simply because each indicator is a formula. We can all make our own formula, taking price, throwing this price in a pot and stir things up, make a formula, and voila, we have our own indicator. But because in each formula have price, so until price does not get its final value, all the indicators, doesn't matter if it's moving averages, RSIs, MACDs, clouds, no matter what, they cannot get their final value on the daily, on the monthly, on the 5 minutes, doesn't matter. Until price does not get its final value, indicators cannot get their final value as well. And one more thing, indicators should help us to try to indicate where price will move next, on the next daily candle, on the next monthly candle, it doesn't matter, on the time frame that we are trading. But they don't. If they were doing what they should have been doing, we should have seen indicators in the future, but we don't. But there is a solution. This is why I stopped using indicators few years back, until I found the solution. And the solution is Fibonacci. I use two main tools, Fibonacci tools. I use the retracement and the channel. I also call it Fibonacci trend lines, because we know in previous video we talked about the true support and resistance areas for price action, which are trend lines. So check the link that will pop just about now. Check this video, very informative video. Check it out, let me know what you think. We have trend lines, 1 point, second point, high, lower high, and this lower high from August to the point. We can take also this high here, and this high here, and this high. If I will use the magnet, it will be more accurate. I have this high here. Also, I can take two lows, this low to this low, and this low here in June's low to the point. And I also can take this low here, this low here to this low here, and this low here from this low to this low, and this low is to the point. But I cannot sit all day and trying to figure out, we also have this one here, you see. Cannot all day long sit and draw lines and lines, because every 2 points will give me some kind of a trend line, and then we will have a mess on the charts, and we don't like mess. We need clean charts to see where price came from. We don't need any indicator to see where price came from. Our problem is where price might be headed from here to the near future, and we can do it on every time frame, on every ticker. So it doesn't matter if it's the SPY, Apple, ENPH, Tesla, QQQ, it doesn't matter, it's working. Now the first one is Fibonacci. If I go backwards in time, I will do from this low to this high here, the low of December 18th to the highs of February 20, and I can see Fibonacci gives me almost to the penny. Again, if I will use the magnet, which I don't like to use very much, it will give me the extension of price action resistance to the future, support, resistance, support to the future. Also, if I take this high here to this low here, it will give me resistance, resistance, support to the future. Now we have also trend lines. We have a Fibonacci tool that will help us with those trend lines. High, lower high to the low. Now you can see it gives me perfect to the penny support, resistance, support, 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 and if I will use the magnet, this one also will be to the penny. And if I will take this short-term uptrend, I take this high here to this high here to the low, and I can see to the penny support and resistance to the future. So Fibonacci is the only tool, and have many other tools. If I find them relevant, I will make videos. These are the only tools that gives us the real support resistance for price action. Of course, we need to learn candlestick analysis, why the candle is here, why it opened here, why it closed where it closed, why the high was where it was, why the low of the candle was where the low of the candle was, on every time frame. Candlestick analysis, this is true price action, and in combination with the Fibonacci tools, support, resistance, trend line, we all can become our own indicators, and we will not have to follow others for any tweets, for groups that, or for any other indicators, lagging indicators, to hope that they will give us what we are looking for. So if you want to become your own indicator, check the links in the description below. We have one-on-one live mentorship program, lifetime access to all the Discord channels. We have premium channels. We trade together with professional traders, options, futures, stocks, ETFs. But we are all our own indicators. We share ideas. We do our own due diligence because we know how to analyze price action. So check the links below. I hope this video is somewhat of an eye-opener, Let me know in the comments below what you think, and until the next video, do good things.